Mr. Chairman. Secretary Fudge, nice to see you again. Thanks for coming back. I don't know, there's something ironic about having folks across the aisle criticize you for how well you're doing your job when we're 8 days away from a shutdown because we still haven't even brought bills to the floor to fund government 4 months after the fiscal year ended. And I guess I just say that because we may need some of your housing help because there's a whole lot of people throwing stones inside glass houses on the other side of this aisle, and we're gonna have some disrepair in those glass houses. But let me move to more substantive points. In 2021, HUD released your climate action plan, and that plan cited research from Johns Hopkins that said that banks are shifting riskier mortgages, including those in coastal areas, off their books and over to the federal government, warned of a potential threat to the stability of financial institutions due to climate change leading to more extreme disasters. I think the department said that your loan guarantee programs could be particularly at risk from climate change because of physical damage, disruptions in borrowers' ability to pay, declining property values. Do you have any sense of what specific states or regions are most exposed to those risks?
Well, certainly those who are near large bodies of water. We have fires all over the West that are created by climate change. I think that any coastal community is at high risk. I can't give you the exact numbers, but that's what we are finding and seeing. I mean, there are some instances where we saw a tornado in Kansas. We had storms in New Jersey. I mean, it is the nature of where we are in the world with climate. Everybody's having climate challenges, and we are no different.
So a geographic concentration. I want to talk a little bit about risk pricing because it strikes me, and I'm sure you felt the same in your current role and back when you were a lowly member of Congress like us schmoes up here. There's this tension between do we accurately price risk, particularly when we need a social safety net and need to make sure that folks are covered. And some of the reporting that's come out of your agency has come out of the CFTC is seeing this risk being shifted onto bodies that are maybe legally not allowed to price risk. There was this story this week that Florida, of all places, is considering socializing their property insurance because they're not willing to let insurers factor in forward risk pricing because that would be politically risky, but now insurers are leaving the state. And so I guess what I'm wondering is, in addition to the geographic risks, are there certain states or places where, or even pockets of the economy where you think the risk is going to be mispriced in such a way that there's going to be some exposure and financial disruption in the economy?
Well, and I'm not sure I'm answering it, but let me suggest that most times when we have major climate crises, they affect the poorest people in our country. When we are talking about how we insure people against these kinds of storms and whatever they may be, what we're talking about is the richest people in the country. The poorest people are the ones who tend to be underinsured or uninsured, whose homes are not built to the standards they should be, who live in areas that are closest to damage. I'm not sure, am I answering your question?
Yeah, I think so. I mean, what I'm trying to understand, and this is maybe way too philosophical a question for 5 minutes, much less the 60 seconds I have left, is where does the risk end up in this system? Because we oversee financial regulators who monitor the stability of our banks. But if the bank can move it onto the insurance company, well, we saw it in 2008 with AIG. All of a sudden, that's outside the regulator's purview until it becomes a larger problem. And if the risk is moving on to taxpayers or moving on to the economically least among us, where does that risk pool that we as regulators should be saying, we can see the risk pooling in that area, let's take proactive measures now while it's relatively easy rather than waiting until we're in a 2008 financial crisis again?
Well, one thing, we have to do something with the insurance companies because there are states they will not insure it. But in the states that they do, you see rising premiums, rising deductibles, to the point where people can't afford to do it, especially in places where they have not had these kinds of occurrences in the past. But now we're having 100-year storms every year. Yeah. We're doing things that are creating an environment in which the average person cannot afford to insure their homes. And I'm not sure if I'm still answering your question. Maybe it is a little philosophical.
Let's continue the conversation. It's this broader issue of climate financial risk. I think our committee can and should do a better job of addressing, and welcome your thoughts on how to do it. Yield back.